Good morning, Anuj. Good morning, Lata. Well, I guess we are starting off what is a brand new week and starting off with some interesting cues, Lata. At least there's some good news coming in from the US president. He seems to be smoking the peace pipe with his Chinese counterpart.
Actually,
so what it's worth, I mean, he's pushing back.
News. I think it's very big for global markets because there was quite clearly a lot of apprehension about higher tariffs for. So, I mean, we cannot brush this under the carpet. It does look like, at least for the moment, a great amount of peace has been bought. And you can see it. Look at the Asian indices. All of them are dancing up over 1%. It's an extremely positive news for them. For us, actually, the other positive is that while this is very good for all the metals, crude for its own reasons is weak. So actually we get a double benefit. You're getting the risk on from global equities. Usually it means higher crude, but today it hasn't. So there is clearly a positive for our markets as far as the world is concerned, but then we are always moving on our own steam. We have underperformed. Today, I guess the positive will come from what the Finance Minister and the GST Council announced. It's going to be a big sentiment boost that affordable homes GST has been cut rather seminally. But from the little I could speak to a lot of realty experts, off air, on air, everybody was praising it. Off air, they're not sure that much will change. I mean, the amount of unsold homes is so huge that they will still have to pass on some of the input tax credit. I mean, that's the idea, right? If your GST is as low as 5%, you can't pass on input tax credit. Even if it is 3% or 1%, you can't pass on input tax credit. They would rather want to pass on because they've already taken credit for cement, for land, for a whole host of building material that they have bought. So off air, a lot of them are still unhappy that they have to pass it on. So let's wait and see.
And this is on under construction flats. This is not on all the huge stock, as you mentioned, of already constructed buildings and you know, houses that are not being sold.
Yeah, we'll just come to that because we're going to discuss that heavily. So it is a positive initially, sentimentally, but I do not know in terms of actual P&L. The final point I'm worried about is Jet. I mean, there is a PTI report. I have written to everybody in SBI I know, and I haven't got any reply from them. But the threat of NCLT, if Etihad doesn't play ball, seems to be definitely there, playing in their minds. And after the way bankers were taken to the cleaners, or rather to the CBI, after being ultra kind to Kingfisher, I don't think anyone is going to risk their own backsides to ensure that Jet stays in the skies. So this, although it's just a PTI report and we don't have confirmation, for me that's a big negative for banks.
Absolutely.
And all banks are involved, private, public, everyone.
One more big entity, I mean, heading the NCLT. Well, let's see if we get some confirmation on that today or not. But let's again try and retain the optimism. It is Monday. So the other heartening fact that came in from trade last week, Anuj, was the fact that, and you were the first one, I mean, absolute credit to point this out, the fact that the mid-cap market started giving us some signs that maybe people want to see the end of this carnage. And that continued for the entire week. The other positive is, of course, the data numbers that you saw. At some point, will India's underperformance end? Because that's the way the numbers are stacking up. FIIs are consistently buying in this market. And for the month of February, they are net positive 2,000 crores. They were net negative 5,000 crores in January. The numbers are at least looking better. The question is, when does it start showing up in the headline index, which, by the way, just for reference, we have flat month to date on the Nifty. The Dow is up 4%. The emerging market index, MSCI emerging market, is up 0.5%. The Asia ex Japan MSCI index is up 2.5%. So relatively, we're still underperforming. But Anuj, do you think some of this positivity that we saw in last week, could that continue this time?
Yeah, and again, it's interesting because, we only want to look at the data right now from 1st Jan. If we look at the data from 1st October, this whole picture will turn upside down. We had a big outperformance in October to December. And, and last year also was quite good. I think statistics, for me, market data is very important. Anecdotes really mean a lot to me. The reason we were very sanguine that we were very close to a mid-cap bottom was that number of stocks hitting 52-week low on the BSE. Last time also it was somewhere around 500. Previous time also it was somewhere around 500. This time also it was somewhere around 500. 466 to be precise. Now that number is down to 131. So a lot of stocks have bounced back from 52-week lows, which is good news. And that really was the highlight of last week. The return of mid-caps. Advanced decline has been good for last 4 days. And I think Tuesday really was the indication the market gave, because on Tuesday, the market almost collapsed. And after that, there was this one-way rally that we have seen. let's see how long this market breadth can continue. This Nifty to mid-cap divergence, which was, I think, around 9% on Tuesday, is now down to 6.8%. I think it will be healthy for the market if the index does not run away. You would want actually the index to consolidate somewhere around 10,800. That's the 20-day moving average as well. So there's a bit of a risk that, there's a 20 DMA halt at 10,800 on the Nifty and around 27,000 on the Bank Nifty. We are very close to those resistance marks. I think the risk reward does not favor a long trade right now. It favored a long trade, 200 points lower on the Nifty and about 500 points lower on the Bank Nifty. The best thing right now would be if Nifty consolidates a bit, perhaps even corrects a bit, and this mid-cap rally continues. I think that's something that you would want to see because, some catch-up is required. In that, one good thing has happened that the even on the Nifty, that narrowness we had seen, that's gone away. TCS has corrected sharply, Reliance has corrected a bit. Some of the beaten down stocks are making a bit of a comeback. That's good news. You want to see this kind of market breadth on the index and outside the index as well.
That will be abetted today by the global good news. Over 60% of the BSE Nifty companies are actually affected by global trade. Either they are importers like steel and their prices are set by landed prices, or they are like IT, benefiting from global trade, or like Reliance, all inputs, output, everything set by global commodity prices. So today the cheer in the global market, I think, would abet this improving of the breadth, hopefully.
I just want to make one point that Brent oil, for whatever it's worth, is still around 67. But the market took it so well in its stride last week. I mean, this rise from 60 to 67 is not penny change. Again, we're looking at a figure of northwards of 67 this morning. Yet the market was pretty sanguine about it last week. And in fact, it showed up in the way oil marketing company stocks were actually rallying instead of falling, because the word on the street now is that look at inventory gains that will come through, not so much bothered about the pricing discipline, quote unquote, which these companies might have to enforce. Anyway, that's the mood of the market right now. Let's get started and let's take a look at what the wise experts have to say as we get set for trade this morning. Mahesh Nadurkar of CLSS says that India has underperformed other major Asian markets in 2019 so far in US dollar terms. This has more than reversed the outperformance during 2018. Relative attractiveness of valuations in these markets, hopes of a trade deal between the US and China, and political uncertainties in India have been the key reasons for this relative trade against India. They believe that the market still hasn't factored in the rising political risk. India's premium to Asia ex-Japan and China has now returned to its 5-year average, but it is still way above the 10-year average, says Mahesh. That's still a slightly cautious view on the Indian market.
Okay. Well, there's more opinion on the macros. Upasna Chachra of Morgan Stanley says growth indicators, mainly consumption-related, remain weak. Macro stability indicators remain range-bound, helped by benign oil prices. They see downside risks to Morgan Stanley's FY19 growth estimates on the back of a weak trend in high-frequency data. Morgan Stanley's fourth quarter calendar 18 growth estimate is tracking 6.9% lower than the 7.1% that it showed up in third quarter calendar 2018.
Let's get you some money market views as well. B. Prasanna of ICICI Bank says the risk of short-term depreciation has increased in the local currency market following the rise in oil prices and geopolitical risks on the border. He expects the rupee to trade in a range of 70.95 to 71.45 during this week.
Okay, not too bad. Well within the range. Bond markets, B. Prasanna says, though the Reserve Bank MPC minutes continue to bear an easing bias in policy rates amid need to support growth, market participants continue to struggle in striking a balance between rates outlook and increased supply in the bond market. He expects the old benchmark 10-year yield to trade between 7.51 to 7.63% this week, and the new 10-year benchmark to trade between 7.35 and 7.45 during this week. I would largely count that as stable.
Okay, let's talk about the global cues. Here's Reema with the world view.
Hi, good morning. The big headline is that Trump will delay the China tariffs, which were originally scheduled to start on 1st of March. So in a Trump, on Sunday, Donald Trump has said that the U.S. has made substantial progress in our trade talks with China. And as a result of these productive talks, he will be delaying the U.S. increase in tariffs, which were scheduled to hit China on the 1st of March. But while the new deadline is not known, there is a lot of optimism on the street and there is green on all the key markets. This announcement came on Sunday, but the rally started on Friday itself in US as well as Europe. So the Dow rallied up 0.7%, crossing the 26,000 mark. For the Nasdaq, it notched its ninth straight weekly gain, while the S&P 500 was also up close to about 0.6%. One stock you should keep on your radar is Kraft Heinz, which ended lower by 27% on the back of an SEC subpoena on an investigation into its accounting practices. And the Dow futures is continuing with that optimism. So currently up close to about 100 odd points on chances that both the countries will secure a deal to end their protracted trade war. Stocks in Europe also rose on trade deal hopes across the board, you can see, but the green was just about 0.1, 0.2%. And the final Brexit vote has now been delayed to the 12th of March. Asian markets too are green as we speak. The last time I checked, the Hang Seng was up close to about 0.25%. That stays. It's China, which is clearly leading from the front with a rally of close to about 2.5%. Keep your eye on Brent crude prices. They have eased from Friday's high of $67.7 per barrel, but still holding above that 67 mark. And last week, crude prices rallied close to about 3%. The SGX Nifty is suggesting a flattish start, but with a positive bias. Back to you.
All right, Rima, thanks so much for that. Security's largely optimistic this morning. Let's move to now the big story, and this is the GST rate cut that was delivered for the real estate sector yesterday. States have agreed to bring the GST rate on under construction property in the normal category down to 5% from the earlier rate of 12%. GST on affordable housing has been slashed all the way to 1% from the earlier rate of 8%. Here's more from Finance Minister Arun Jaitley on the cuts that were announced by the GST Council yesterday.
नॉर्मल हाउसिंग में बिना आईटीसी के, विदाउट आईटीसी, द जीएसटी पेबल फॉर फ्लैट्स अंडर कंस्ट्रक्शन विल बी 5%. ये जो रिकमेंडेशन थी जीओएम की, हम लोगों ने एक्सेप्ट कर ली. अफोर्डेबल हाउसिंग के बारे में जीओएम ने कहा था कि 3% और लेस. और उसमें अगर हमने रेवेन्यू न्यूट्रल रेट निकाला तो वो लेस देन 3% बनता था. और इसलिए अफोर्डेबल हाउसिंग को इंकरेजमेंट दी जाए तो उसका जीएसटी रेट 1% के ऊपर कंसेंसस हुआ. अब हाउसिंग के ऊपर दो रेट रहेंगे, दोनों बिना आईटीसी के रहेंगे. नॉर्मल हाउसिंग 5% और अफोर्डेबल हाउसिंग 1%. और इसको 1% रखने की वजह से अफोर्डेबल हाउसिंग को और 5% को, रियल एस्टेट सेक्टर को जो हम एक बहुत बड़ा बूम देना चाहते हैं, वी हैव एक्सपैंडेड द डेफिनेशन ऑफ द अफोर्डेबल हाउसिंग so that aspiring people can buy slightly bigger. 60 meters carpet area in metros and 90 meters outside the metros. So which approximately translates into a 2-bedroom house in a metro and a 3-bedroom possibly outside, depending on the size. Or 45 lakhs is the agreed. This will come into effect from the 1st of April 2019.
Okay, well, that's a huge boost given to affordable housing. Actually, the redefinition also is important because outside of Mumbai, 45 lakhs would fetch a very decent house. Maybe outside of Mumbai and NCR, perhaps you should be able to get. But the point is, you know, as we had those real estate experts telling us last week on the channel, the extent of unsold homes is 4.4 times what it was in 2013. In the last 5 years, it's risen by 4.4 times, and actual home sales have risen by 1.28 times. That's a measure of the amount of supply available. So to what extent will this GST reduction help? We have our real estate editor, Manisha Natarajan, joining us on the phone line. Manisha, you must have worked the phones. Tell us, is this cut in GST helpful? Because there were some who were telling us earlier that not giving input tax credit is a major negative.
Lata, I would assume that this is more a sentiment boost for the market and for the buyer, who was always confused whether he was getting the benefit of the input tax credit that the developers or the builders were getting. But if I do the math, and this is something that the industry leaders were telling us even before the rate cut has happened, that on an average, if you were paying 18% average GST on inputs and getting an adjustment of what the home buyer was paying at 12%, right now, after the cut, the developer will have to absorb about 5 to 6% extra cost. The second big question mark is, what is the government's transition policy? Because, you know, any project will take about 4 to 5 years to complete, maybe earliest at 3 years. Under construction projects have been sold, and at every point, at least the good listed developers have been passing on the benefit of input tax credit in the purchase price. Now, who will reimburse these developers? Otherwise, they will have to absorb the cost, because this market cannot take any price rise. You just mentioned the inventory levels. They're so high, the buyer is expecting price cut to come in, not prices to go up. So that's another big question. What happens to the month of March? Now, this is a signal for the buyer to actually wait for 1st April 2019. Why would they buy in March if they're expecting some cut in prices to come? Definitely, developer margins are going to be somewhat affected in the short term. They will slowly increase the price, but a sentiment boost is definitely there. And most importantly, I think the positive is, from the developer community, they said that, you know, every month we would get 1 or 2 buyers slapping a anti-profiteering, charge on us, and we had to continuously justify ourselves that we were passing on the input tax credit. So that is going to go away. Joint developments where 18% had to be paid when one builder was buying a landowner's property, that is now going to be corrected. So those are the two benefits. But I do not believe that the balance sheets of listed players are going to see any benefit out of this, or sales are going to rev up in any big way, at least not in the month of March for sure. Even from April, there's plenty of inventory. There'll be a little bit of ease of doing business for builders and for the buyer to know that, okay, he does not have to pay a very high tax. But bottom lines, absolutely not.
Okay, Manisha, take that point. Thanks very much. Yes, the numbers don't seem to be really adding up if you take away the ITC or the input tax credit. We'll have to see how this plays out. More analysis on this, of course, coming up as well. But we need to get into a quick break right now. As we do that, we'll leave you with some visuals of Prime Minister Modi launching the Pradhan Mantri Kisan Samman Nidhi scheme. This happened from Gorakhpur in Uttar Pradesh yesterday. Numbers as of now appear quite big. Over 2,000 crore rupees have been transferred to over 1 crore beneficiaries.